Hello everyone, and welcome to the Dollar Auction Show. Today we have a lot of topics to cover on the news side, and then afterwards we will speak briefly about two phenomenal drivers of growth, in my opinion, and that's decentralized social networks and artificial intelligence. And I have some cool things to show the listeners on both of these fronts. So first of all, since we last spoke, there have been many developments. Namely, the Federal Reserve decided to open up the markets to unlimited liquidity for banks. And that's pretty crazy. Nothing like that has happened ever, but also no similar injection of liquidity has happened since the COVID injection of liquidity. So this is quite a big turning point in the banking system and in the general money supply strategy, if you will, of the Federal Reserve. And we'll talk about why this impacts Bitcoin as well as the stock market. So first of all, let's recap what happened with Silicon Valley Bank and all of these other banks that went under. What happened is that the Federal Reserve kept interest rates at a very low level and also injected tons of liquidity into the system because of COVID in 2020 and 2021. That liquidity is basically dollars. So they printed a bunch of dollars. They gave some of them to people, gave others to companies in terms of like loans and stuff like that. But also, all of these dollars that the Federal Reserve created went into the banking system. So it doesn't matter what happened with which bank, which country, but it all went into the banking system. And so what happened to the banks? They suddenly saw a huge increase in deposits. When you have a huge increase in deposits, but the interest rates are very, very low, it means it's hard to put that money to work. So the banks are thinking, what should we do with this money? So it's available to depositors when they need it, but also it can generate some yield for us so we can fund our banking operations with that yield. And so the Federal Reserve was saying throughout all of 2021, inflation is transitory. Federal Reserve, the Fed funds rate will stay low, and it will stay low forever. And Balaji Srinivasan has some really good tweets showing how they were all predicting, like if you were asking the Federal Reserve governors, but also industry participants, they were all predicting that the interest rate will stay low for a very long time and that inflation is transitory and all of that stuff. But then the war in Ukraine happened and inflation started picking up. And also the money that was printed slowly started to make its way into the economy. So more and more and more money was sloshing around, and that brought prices up. Brought prices up quite dramatically. And so then the Fed was, oh my God, what are we going to do about this? Because we need to tame inflation, because if we don't tame inflation, there's there's a very well-known phenomenon that basically says, look, inflation, as soon as people start expecting it, and that's called inflation expectations, that's the main driver of inflation. So basically, if people expect prices to be higher next year, what they will do this year is buy all the assets and commodities and anything they need, basically. They'll buy it this year. And because they buy it this year and they're less sensitive to prices, it's just like, I'll buy whatever. Then what happens is prices go up. And so because of that, and that has basically been the case kind of forever. So if we look at the money supply, I'll share a screen here. So this is the total money supply of US dollars. It's called M2. So it covers the money supply in the system. And we can see that since 1981, it has been pretty much going up, pretty much constantly going up. There was one time around 2018 when they only paused a little bit. You can see here in 2018, 2019, the rate of growth paused a little bit, and that caused the stock market to crash. And the reason why that's the case is because the rate of growth goes down, which means interest rates go up, which then means that um, when the interest rates go up, it's harder to get money to fund projects. Stocks need to be discounted by the interest rate that's expected, and so that's why the price of stocks goes down. And so what you can see here, first of all, this is the very dramatic growth in money supply. But if we go to a smaller resolution here, you can see this little dip here from this little dip here towards the end of 2018. You see how the money supply went down from 14.5 trillion to 14.3 trillion. That caused the stock market to crash. Another time where we had a reduction in supply was here as COVID hit. We had like a shock. And then suddenly they printed so much money. You can see they printed from 15 trillion. They increased the monetary base to a peak here of 21 trillion. So if you think 15 trillion to 21 trillion, that's adding $6 trillion of liquidity into the system. And those $6 trillion out of 15, that's quite a significant percentage increase. And that's why prices went up. So then in the beginning of 2022, they started tightening. So they started increasing interest rates and removing liquidity from the system. And you can see that basically the liquidity here went from a peak of 21.8 trillion down to a trough of 21 trillion. So only like 0.8 trillion out of the 6 trillion that were added were reduced. And that caused crazy chaos in the markets because the banks were not able to roll over the treasuries that they bought. They were usually short-term treasuries. When the interest rate goes up, the price of these treasuries goes down. And when you need to roll them over, suddenly the bank is insolvent, right? So if they had like, let's say, $10 billion worth of treasuries, if those go down by, let's say, 20%, suddenly you lose $2 billion. That's a lot of money. And the worst case is you have a double loss. First of all, you have less money when you roll it over. But second of all, when you roll over the debt, if you cannot pay the higher debt, you basically go into default. And so that's what happened to three of the banks, Silicon Valley Bank and some other small banks. And then suddenly the Fed was saying, this was a Sunday towards mid-March, they were saying, oh, we have to inject a lot of liquidity back into the system to prevent these bank runs. And so this is what you see here. They started from a bottom of 21 trillion. Now we're already at 21.12. So they're starting to increase the money supply. But more importantly, they basically said, look, if you're a bank and you have treasuries that are not that are below their par value. So let's say you bought the $10 billion worth of treasuries, they're worth $8 billion now. You can give us those treasuries and you can borrow against them at a $10 billion valuation. And that's like the critical part, which is basically the Fed injects liquidity twice. First of all, it gives money to the banks, but also it gives money to the banks at a higher collateral value than otherwise it would have been. And so the banks started taking advantage of that like crazy and borrowing lots of money because it's basically free money. And you can see here in this chart, this is the small banks, and you can see their cash assets. They were bleeding from the beginning of 2022, bleeding down. And suddenly now here, the Fed opened that window where they can borrow against their treasuries at par. And suddenly, boom, it started going back up. So they prevented a liquidity crisis. But the big problem is that this is not really solving the problem because you're just printing more money, and printing money is never the solution to the problem. Like if the banks made bad loans, they should write them off, they should go bankrupt, and that's how the leverage will clear itself out of the system. People just took too much leverage. And I heard an interview with a small bank CEO. He basically said, look, if we would have listened to the Fed, we could have made like $3 million in revenue, but it would have been $30 million of losses if it turned against us. So that's a very small bank. Imagine what happens to a big bank. So that's what's happening these days. That's why prices are pumping. The Federal Reserve is basically adding more and more money to the system. And people are afraid that if this creates even more inflation, then the Fed will have to put some sort of capital controls, so people cannot necessarily take the printed money and get it out of the system by, for example, buying gold or buying Bitcoin. So that's what's happening with the markets right now. That's why Balaji is basically telling people, hey, buy Bitcoin, take it off the exchanges, put it into self-custody, because basically Bitcoin is the only asset that governments cannot steal from you. Like, even if you have a brick of gold, they can say, look, you cannot leave the country with it. So that's a form of capital controls. Or they can put a very high exit tax to exit the country with gold. With Bitcoin, the government doesn't necessarily know how much Bitcoin a person has, and also it's not very easy to monitor. If someone travels to another country, they can just keep it in their brain. So that's what's happening right now. Very exciting times for me, because I think this is the Fed pivot that everybody was waiting for, which means that prices will start going up. Now, look, I could be wrong, and there could be a great. The other view is that there's going to be a really, really big recession. So that basically means that it will be deflationary. So there will be a recession. People will, lose their jobs, buy less stuff, and so that would be a deflationary pressure. So nobody knows which of these two scenarios will happen. But my bet is over the long term, over the very, very long term, we have almost 400% debt to GDP globally. There's absolutely no way to get rid of this debt unless it's just inflating the GDP by creating inflation. So that's what I think will happen. And we'll see what the future will bring. It's definitely unprecedented times, because in the 70s and the 80s, they could raise interest rates really, really drastically because there was not too much debt in the system. But now they cannot raise the interest rates and still keep the system solvent. So it will be very, very interesting to see what the decision is. Now, I sometimes like to zoom out of the kind of day-to-day and predictions of what will the Fed do and what will the policy do, and talk about our main thesis, which is growth and growth in the economy. And there's two things that are very, very exciting about growth. First of all the artificial intelligence advances that are happening now are just breathtaking. And they're breathtaking not just because there's a couple of things that changed. First of all, the model that OpenAI trained with GPT-4 was basically the fastest growing product launch in history. They reached billions and billions of users and many millions of active users. So it's very, very the adoption has been unprecedented. And the key part of these models, they're not doing anything magical. Basically, what the model does is it trains over a huge set of data, but then people, it's called reinforcement learning. So humans basically tell it, this was a good prediction, this was a bad prediction, this answer was good, this answer was bad. And the more people use it, the better it becomes. Just like with Tesla, the more people drive a Tesla, the more data goes into the self-driving algorithm, and then it can improve. So very, very exciting that the AI is just getting to be really, really good. So GPT is now passing all the exams, like law school exams and med school exams, and it's just crazy the amount of productivity that a human can have with a co-pilot, like an AI assistant that basically tells the human, this is what you should do, or this is the direction you should look into. So the human still makes the final decisions, but it just the AI narrows the set of things that the human needs to observe. And so I heard a really interesting interview with Ilya Sutskever, who's the chief scientist of OpenAI, and he basically said, look, this can also improve life for people. So it can start with very simple things like GPT-4 now. You can take a picture of the food in your fridge, literally just a picture, upload it to GPT-4, and it spits out recipes that you can do with this food. Now imagine if this thing also knows like your health issues, and it can tell you which recipes you can make with your food so it's healthier for you. And different people have different health characteristics. So that's why dieting and stuff like that wasn't very helpful. Just that's a scientific fact. Like diets pretty much don't work at scale. What does work, like if you tell everybody eat only meat or eat like Mediterranean diet or whatever, it doesn't work as much. What does work is some kind of individual monitoring, let's say, of your glucose levels. And there's a company, I think it's called Levels. What they do is continuously monitor your glucose, and you can see like someone, Peter Diamandis, said on his podcast, if he eats a slice of bread, then it spikes his glucose. But if he dips that bread in olive oil, then the spike isn't as high, and a high spike of glucose is correlated to cancer, to diabetes, to many bad things. But when you dip the bread in oil, the peak is lower, and the satiety lasts for longer. So it's actually a much better. You can eat the same amount of calories, but get them processed in your body better. And each body processes these things differently. So it's very, very exciting. Imagine that this continuous glucose monitor has also like your data of what works for you, what doesn't work for you. You take a picture of the food in your fridge. It tells you, hey, cook that thing with this food. But then if you cook that thing and you eat it and then the glucose spikes, it will know to not recommend that thing to you again. So it can basically do the optimization for you. Like it can suggest different things for you to eat, and then it gets feedback of like what happens to your glucose after eating them, and then it learns about you. Or you can even connect it to your weight, to your scale, and basically correlate things that you're eating, times where you're eating, stuff like that, to weight gain or weight loss, and then it can just become better over time. So that's for health. It can also help you make better decisions about your life. So he basically said, imagine you have access to the world's best meditation teacher that can teach you how to not be stressed about things, Like there's just so much that GPT can do, because like we know that we have cognitive biases. We know we have many cognitive biases. Like for example, we pay more attention to recent stuff versus to things that happened in the past. We pay more attention to stuff that's very salient versus things that are small over time. So for example, if you drink a lot and get a crazy, crazy hangover, you'll remember that. But if you just have like 2 or 3 drinks per day, you don't feel the hangover the next day. But if you do it over a very long period of time, that might be very bad, but we don't notice that. So I really think that AI can help humans get to better decisions. And when we think about productivity, what's productivity? Productivity is basically the input is energy, and the output is something that creates more value than the cost of the energy that was input into the system. And that's a pretty generic way to think about productivity. You can think about productivity of anything, of a company, of a person, of a family, of whatever you want. That's a way to look at it, right? So for example, in the family, if the family spends more than they make, then they'll go bankrupt. But then suddenly if they find ways to like create more value than what they're making, then they will not go bankrupt. So you can take this concept to anything and have better relationships, better health, better productivity. And in aggregate, this can really, really help GDP. Just GDP is just a function of what we can produce as humans. So it will be very, very interesting to see the advances in AI. And I also wanted to show you guys some really, really really crazy things that can be done with AI even today. Here, I'll queue up the
AI image generator, Midjourney, has just ticked into its 5th iteration. Some of the images that have come out of it are so lifelike that it's insane. Let's take a look at some of them.
So what you can see here is that AI can generate images that are pretty amazing. And the images are not just amazing as still images, but there are now fully uh, like videos that are created from scratch and all by AI. And it's like a video, it's all animated. I'll try to show you an example here. The craziest thing about this idea of the AI generating movies and images and videos from scratch is that now also GPT has access to other apps. So it can actually see the internet. It can see real-time data. So imagine a movie where you basically not only do you generate the movie, but if there's a scene in the movie where they're watching the news can be streamed live, and every time you play the movie, the news that the character watches in the movie changes, right? So we can completely revolutionize the world of entertainment with this technology. So very much looking forward to seeing what will happen. Maybe the next blockbuster movie will be completely created by AI, so designed by AI. The script can be written by AI. The characters developed, all of that can be automatic. And I wouldn't be surprised if in 10 years we will have like the number one box office movie being created without any human touch. Or maybe the humans just giving prompts to the AI. So just think of what will happen to the price of entertainment. And it's just super exciting. The other topic that I wanted to talk about is the open source social networks. So there is a social network called Noster on top of Bitcoin, and it's something very, very exciting because it's the first decentralized social network. But when we say social network, it can be something very general. So it can be Twitter, it can be Facebook, but it can also be Venmo. So if you think of a payment app, right, it's a social network where you have your contacts and you pay back and forth, and then you basically are able to port. Let's say someone comes up with a better app than Venmo. I could just like sign up to the better app, and immediately all my contacts and all my history is ported there because it's open source and because I own the data. Now, if we think of social media companies and tech companies in general as walled gardens, so they control all your data and they use it to create a good user experience, like a good news feed. But the problem is that they own it. And so if they train artificial intelligence algorithms on that data, the training equity belongs to the company. And then it's kind of really hard to ever outcompete them, and they will be bigger and bigger and more powerful. But what happens if the social media platform is open source and the data is open source? And then you can just like own the trained artificial intelligence that was created for that data. Then suddenly you can create value for yourself. And that becomes very, very interesting. I still don't know where this will go. There's many different paths that this technology can take, but I'm excited to see where it goes. In the meantime, please let us know what you think about this content. Would you like to see more tech content, more technical content, more, you know, things that are outside of just pure finance and crypto? And we're happy to generate more of that for you. So please like, subscribe, and leave comments. And we'll see you next time.